Good evening, guys. Welcome to the monthly IBD Meetup overview. My name is Roy Maddox, and Wes and I are the host and the facilitators of this monthly webinar. This meetup is sponsored by Investors Business Daily, and we are one of the largest meetup groups in the country. I'm also the chief market strategist of a firm here in Charlotte, Integrated Financial Strategies. And Wes is the co-portfolio manager and chief market technical strategist. I've been employing CanSlim tactics for over 3 decades, for over 35 years now. I met Bill O'Neill in 1988 along with David Ryan and embraced the philosophy, got his initial book, and really that changed my life. And it became for me a joyful experience for learning and employing those tactics and techniques over the past 3 decades. So tonight we're going to share some of those tactics and techniques with you. So we hope that it will be a great educational experience for you tonight. And we'll send a slide deck out, and also we'll record this seminar so that you can go back and watch it over and over again if you would like. If you're not on our mailing list and would like to receive our comments periodically, Wes is going to drop a link, and you may sign up on the link. We're a private meetup group of over 2,000 ardent investors across the country who know with 100% certainty that finding and investing, capturing the gains in true market leaders can change your life. It certainly has done so for me, as well as many of my constituents. We're like-minded individuals from the fact that we look at both fundamental and technical factors in managing an investment portfolio. We don't believe a buy and hold methodology works over time, particularly when you have the devastating bear markets that we experienced from 2000 to 2003, and also 2007 to 2009. It is important and crucial to avoid those major bear markets so your capital doesn't dwindle 50 to 70%, which typically can happen in a devastating bear market. And we have gone through a devastating bear market. The advanced decline line peaked in February 2021, and we've gone straight down for over 2 years. This has been one of the longest and most prolonged bear markets. In fact, its duration and magnitude, it rivals these other bear markets like 2000 to 2002 and 2007 and 2009, and also 73 and 74, by the nature of the amount of stocks that have declined so precipitously. So we have that in common. All of us tonight aim to educate each other and learn and connect in this vibrant Zoom opportunity. So we look forward to presenting our program, and also having feedback and discussing the market as well as individual stocks throughout the presentation tonight. We focus on many of the factors found in William O'Neill's book, How to Make Money in Stocks. With IBD's educational support, it is possible to learn many of the intricacies of how the stock market works. Tonight's agenda will be focused on 2 parts. In the first part, we will present a slide deck, and we'll talk about a number of factors that are important to know in terms of fundamental factors, technical factors, interest rates, stock participation, the economic backdrop, along with a macro overview. In the second part of this presentation, we'll talk about individual stocks. We're going to show you who we think are the true market leaders of this cycle that are emerging for the first time, coming after this November 1st follow-through day. We think this time is different from the standpoint that the last two follow-through days have failed. We think that there's a 90% chance that this follow-through day will stick. So that's important to know. We'll take questions as well, and be sure to interject your thoughts and opinions as we go through the slide deck if you have any additional questions. The presentation will end officially at 9 p.m., but Wes and I will stay on probably much later than that to answer any additional questions that you have, or really to talk about any additional stocks that you're interested in. If you're a novice investor, and this is the first time that you've attended our presentation, don't fret. Many of us were novice investors at one time. And in fact, the most successful investors that I have developed a relationship with over the years did not really have master's degrees or doctorate degrees. They just had a passion for learning everything that they could about the market. And with the internet and the tools that are available today, it's never more has it been possible for you to change and accelerate your learning curve. So we're excited about that. So that's all that I have right now. So let's get started in the slide deck. A little background information of what we are and what we do here in Charlotte. Also, you might be interested in knowing that we'll have people on the call that are calling in from all over the country. We'll have people from New York and Texas and California and Montana, just all over the place. So we're excited about having you here and tuning in here in Charlotte, North Carolina tonight. And of course, this is our disclaimer. Nothing that Wes and I will be talking about tonight should be construed as a recommendation to buy or sell a security. All information that we'll talk about tonight, of course, is for educational purposes only. Okay, CanSlim. This is the thrust of the book that William O'Neill developed and designed many, many years ago. So he developed a formula that he found that these were the characteristics of great winning stocks in the past that became part of what was known as the model books in IBD parlance. And this acronym, CanSlim, is well known throughout the whole country because of William O'Neill's importance and the resources that he shared over the decades with us from Investors Business Daily. So if you don't subscribe to Investors Business Daily, we urge you to do so. It is by far the best resources that I've found in the market for acquiring information on stocks that is very reasonable in price that I have known over the past 3 decades. So we're not going to go into great detail into the CanSlim acronym because all of this is covered in the book. So we urge you to read and study the book. I read the book probably, and there's a 4th edition now. I read the book at least once a year, and I have done so for many, many years just to keep apprised and just to keep these techniques and what to look for cemented in my brain. And never is it more important than doing so when you're in a bear market. So that you're fully equipped to take advantage of the new uptrend and the new bull market. Tonight, Wes and I will be talking about technical analysis, fundamental analysis, and macroeconomic analysis. These are the 3 stools that we believe that are important in designing an investment portfolio. Technical analysis have to do with these technical indicators that many of you may have found in books such as Technical Analysis by Edwards and McGee. There are a number of books that have been written that are great, that describe technical indicators to help you and equip you with making decisions. They're all based on price and volume, and that's the most important ingredient to know. We look at things like the MACD index, which is moving average convergence divergence momentum indicator. We look at things like stochastics and the SKSD lane indicator. We look at point and figure charts. Most importantly, we look at trend. So it is important in terms of being a trend follower. It is important to note, it's the most important thing to know. Are we in an uptrend? Are we in a downtrend? Or is the market under pressure? Because what that will allow you to do, it will allow you to know, well, how invested should you be in the market? How, what your asset allocation should be? How should you be aggressive or should you be defensive based on the current market trend? That's all very important. This past weekend, I met Larry Height, who came up to me after the panel discussion, and he is one of the greatest trend following market wizards of all time. He was featured in the initial book, Market Wizards, and it was a delight to know him. He's purely a trend follower, and he's still up and at it at 82 years of age. So it was just a pleasure being able to share and exchange information with somebody that esteemed. So trend, I view trend, and Wes and I, we talk about this a lot, that when the market's in a short-term uptrend, the 10-day exponential moving average has to be above the 21-day EMA. For us to be in an intermediate term uptrend, the 21-day EMA has to be above the 50-day simple moving average. And for us to be in a long-term uptrend, we actually have to have 2 consecutive weeks above the 30-week moving average. And recently, when you go back and look on your charts, you can see that we had briefly 2 consecutive weeks below the 30-week moving average on the NASDAQ, but it immediately turned a week ago, and we're back in a long-term uptrend. We're going to look at tonight, we're going to look at some breadth indicators. It's important to know how many stocks are above the 50-day moving average and the 200-day moving average. That gives you context to let you know, is the market favorable or unfavorable in finding opportunities to invest in. As you know, the market, the indexes this year have been up, but they have been concentrated in what's known as the Magnificent Seven. 7 stocks have generated about 40% of the returns in the NASDAQ 100. That's a very, very thin market. And this concentration in these technology stocks has been concentrated not only in the NASDAQ 100 stocks, but the S&P 500 stocks as well. In fact, recently, as to a couple of weeks ago, I think I saw where 91% of all stocks in the S&P 500 were flat or down on the year. So that's an environment that's not conducive typically for trading or finding many different opportunities to invest in. And so that has been the case. Now, what we're going to see tonight when we look at some of these breadth indicators, it's improving, and it's improving dramatically as we consider things like the new high and new low index. That's an important and crucial element in terms of having a market environment that is tradable and that's going to provide great opportunities. For Investors Business Daily types of investing and trading, you want to see many stocks hitting new highs, and we really had a proliferation of those today for the first time. So Wes will also be talking about sentiment. He'll be talking about some of these sentiment indicators that are important to know. They're anecdotal indicators. They're important to know just to give you context as well. A fundamental analysis. This is really the breadbasket of what we're looking for here in the CAN-SLIM acronym. You can find all this information on charts that are prepared and presented from Investors Business Daily. Wes and I use a program called MarketSmith. Most portfolio managers across the country subscribe to that platform, or a platform that's similar from an institutional quality standpoint. So MarketSmith is a great resource in identifying fundamental information. It's all on your chart. So we think that that's very, very useful. And of course, macroeconomic analysis is really what's happening in the economy. And we use a service called Hedge Eye Research, and the stem winder there is Keith McCullough, and we think that he's got a really good handle on the macroeconomic analysis. We have rarely found economic professors or economists that can trade the market successfully, but we do find that they provide very useful and interesting information that we think is important. We think that it's important to know where, for example, what money supply is doing. We think it's important to know what inflation is doing. And we think it's important to know what the growth in our economy, GDP, is and how that is trending. And all those provide useful information in terms of selecting, well, which asset class should I be in? What are the best performing asset classes based on where we are in the economic cycle? And what are the worst performing assets based on the economic cycle? Recently, over the past month, we have concluded that bonds were very, very attractive. And we thought that interest rates were at 16-year highs, and that was going to provide a great opportunity to invest in bonds. And we used the TLT to make that decision. And we think also that for the first time over the past 30 days, we think that like an asset allocation of 60-40, which typically financial advisors recommend they have for many, many years, that's been out of favor and has been non-profitable for really the last 5 years. We think that that's really going to make money over the next 5 years. And we don't believe that you should take a basket, that everyone should take a basket and put their money in a 60-40 portfolio without enjoying the leverage that comes with individual stocks. We think individual stocks are going to provide you the best returns long-term, and they're going to do much better than the indexes. But coming off of a market bottom, it's always easier to get immediate exposure by immediately investing in the indexes and then filling those positions out as opportunities present themselves as the new bull market expands, broadens, and matures. And with that, let me turn it over to Wes. Wes will take us through the remaining concepts that we wanted to discuss tonight and take us through the slide deck. And then when Wes is through, we will take a 5-minute break, and then we'll get into what I really love, which is talking about individual stocks. And we have many to talk about tonight. So with that, Wes, I will turn it over to you.
Right. you for that. Yeah, I'll go over a few things that a couple things sort of more recent, and then kind of the regular charts that we always look at the back. Um, so some of you may have seen that there was another Marty Zweig breath thrust. We talked about this at our April meeting because there was one of these um, kind of triggered on March 31st of this year. And it was interesting that two of them happen so close together. It's not like a very common thing. It has something to do with the 10-day moving average or 10-day average of advancers to decliners hitting a 2-to-1 ratio in a very quick amount of time too. I think it has to go from it has to go from like 1 to 2. I don't know. I can't remember exactly how it's calculated, but it's a big surge in advancing stocks with up stocks outpacing down stocks for 10 straight days. And anyways, we got another one. And in the red boxes here, I circled where they've occurred, where a second thrust has occurred kind of shortly after the first one. So in 1962, 4 months after the first one, there was another. And just to give you a sense of what the results look like, too, because you might think, all right, well, if there was already a thrust, maybe there was already upside that occurred, and the second one won't be as powerful. But maybe it's actually the opposite. Is kind of what you see with the two in history, where these were actually particularly strong results, following these breath thrusts. So, anyways, in general, it's a very solid indicator with a very good track record, 6 and 12 months down the line. And you can see that the one that we saw in March 31st has actually been kind of lackluster compared to the average. And this is looking at the S&P. So the S&P is only up 4.3% from the time that was triggered, and 9.3%, maybe like that was year to date or something, or basically through, I think it was priced through yesterday. Yesterday's closed. So the first one, not as much. You haven't really missed out on much based on that. And you have the second one that just occurred just I guess 11 days ago. So it's an interesting kind of indicator that we've always followed and made note of. So, oh shoot. So okay, here's just a longer term chart to give you an idea of where these things have historically occurred. Down here in green, these little green dots being where these thrusts occur. And I'm just, visually you can kind of see that they have done a pretty good job of, setting the stage for a longer term run. And here's a chart of the average returns over different periods of time after these things. Okay, and I wanted to zoom in just to give you a better picture of this year. So here's the first one that was triggered on March 31st. I noticed that, we'll look at this again too on the indexes, but there's that when this was triggered in March 31st, it kind of we did go sideways for maybe 6 weeks right there, immediately following, and then only, after that period of digestion, we made another run up through July. So far after this one, clearly we've made that quick burst up the last 10 days or so. So haven't seen that rest period, but you will get one. It's important not to buy extended, and but this is just to give you an idea of what can happen. Remember, you don't have to chase. This is supposed to be some kind of indicator of saying conditions have improved because there's been a massive move in a bunch of stocks, and a change in character in the market is what we're looking for. And so we think we've seen that, and you're going to have an opportunity to make a decent amount of money in individual stocks coming up. And so we know what's kind of been fueling a lot of the movement in the indexes. It's been CPI, it's been interest rates, things like that. And we had another CPI report today that got things going. We were up 2% or so in the indexes, and we got this kind of cooler number where the headline came in at 3.2%, And so that's down from 3.7% last month. And so with that, rates came down pretty significantly on the longer end of the curve. And so here's a look. The nowcast shows a slowing again in November. This is the Fed nowcast. That's my favorite source to check for forecasts of these numbers. And that's been good for stocks. As rates have gone higher, it's been bad for stocks. As rates have gone lower, it's been good for stocks. We know how that mechanism works through the real economy too. So as rates come down, that's obviously good for the real economy. But I wanted to look at the components too of the CPI report. This is the core CPI, so excluding the food and energy portion. It's a little bit slower moving. It includes some services, right, which include wages, and everyone's been saying about how that's going to be sticky and all that. And sure, it has been, and it is historically slower moving because of wages, but they're making a lot of progress on core, and I don't think that's going to stop. And I think I've shared this before, but this component is the obvious reason why the core is going to continue to get better. While it might take a while, right? It's going to be a slow moving thing, as it is. This shelter component always lags real-time data. But if this goes down just back to a historical level of 3%, from 7 to 3% over the next year or so, that's going to be a serious tailwind, I guess, to lowering CPI. Despite anything else that's volatile that might be going on, this on its own is going to be a significant driver of bringing things down. And so, yeah, we talked about I mentioned the rates. This is the 10-year Treasury yield, a 2-year chart, and you can see that kind of break of the 50-day on heavy volume, right? And that's one of the things we talk about in charts. And so we're kind of looking at this the same way as a chart of a stock. And that's a sell signal, right? That's telling us, I mean, this already should have told, should have alerted you, right? The breaks here, and then this follow through down is the clear, real, sell signal where we think rates go lower from here, and that was an important move today. And we do own some of this TLT, which I'll show on the next chart, and this was a big reason why. I think we sort of tried to call the top, and maybe we're a week or two off of the top. I think we were decently close to getting that the peak in rates for that TLT, but this is what we were looking for, a move from 5% to, I mean, I don't even know but some kind of reversion to the mean when you're talking about a 15-year high in this rate. It just we think it made sense to try this TLT right here. And I think this is actually where we bought it, October 3rd or 4th. And then a couple of items came out, like a couple of jobs reports have helped have helped bond rates kind of come down, and then the CPI report as well. But that's this is something that we thought made a lot of sense, a good risk reward. We were trying to call the bottom in something that has, in bonds, that just has 15% upside or so to 100, and also gives you a coupon of 5%, right? So then you've got this kind of decent bond trade available for you.
Yeah, Wes, I think we added to that at 86, if I'm not 84. I think our average cost is 86 on that.
I think we did add. You're right. Like we bought here, and then we would have bought, I think, this day or this day, huh?
Yeah. Yeah, we're again, 86 average cost. Yeah.
Yeah. Okay, and then the weekly chart of the TLT, not again, just giving you an idea, right? This has been it was a historic drawdown, and we think the bottom's in, and this was a key thing that we were looking at too, right? I think we bought it in this red week, first, thinking that was capitulation, but there was one more week to go of really, really heavy volume, and I think this was a huge indicator to us that we were getting close to at least a turning point. So, we'll see if it does hold, but um, this is important for stocks. So if this goes up, we think, both things can potentially rally here, stocks and bonds. Okay, and I wanted to point out the IWM today, especially right up 5.5%. So a big change here with small caps really outperforming large caps today, and we think this could be um, an important turning point as well in small caps. They've really been difficult to trade in small caps for this year. The action's really been in the large caps and the Magnificent Seven especially. And if you've traded those, then you've probably had a pretty good year. But you can see the IWM was making nearly a new low just 2 weeks ago compared to the June and October lows here. And we think that this move off the bottom, this significant pile in, big volume, could be a change where you're going to see small caps actually outperform large caps starting today, really.
And by the way, Wes, that was, if we look at that, did you have the weekly? Is it the weekly the next chart or the monthly?
I
IW?
don't have that one.
Oh, okay. Well, incidentally, it's important to note if you take a look, and I'm looking on my Market Smith chart right now on the IWM. You've essentially made no progress in 5 years based on the decline, the magnitude of the decline from the 2021 top. You've really made no progress for 5 years. So this is with the volume that show the powerful volume showing up today. That's thrusting this indicator higher. We think that the low is definitely in the IWM. And we think that better times are coming for CAN-SLIM investors, growth investors. And we think that the FFTY, in fact, we'll talk about that later on in the presentation, probably bottomed 2 weeks ago. And so after the turmoil that we've experienced in terms of growth, other than these 7 big cap stocks, we think that you can see the light at the end of the tunnel, and this should lead to a very robust, broad market rally from here.
Yep. Thanks. And yeah, I did just want to make sure everyone could see this is what he was talking about, the 5-year sort of sideways action in the IWM longer term. Okay, and someone mentioned this, or maybe I don't know. I just noticed XLK, the technology ETF, at an all-time high, which I thought was incredible. Because it's not like it's been the easiest market to trade in, but something like this that's at an all-time high. That's a basket of tech stocks. I mean, it's still heavily weighted towards some larger stocks like Microsoft and stuff like that. But I thought it was interesting, and this should be encouraging. I remember, when Nvidia broke out to an all-time high, that was important for the market. That helped. When you have things making all-time highs, that should lead to a better, easier trading environment. And I think an index like this at an all-time high just kind of highlighted that something may have changed here. And I have the green line there. It's a green line breakout, which is a term coined by Dr. Eric Wish. So just wanted to, if anyone, is interested in looking into his philosophy, we like his work as well. Okay, and I wanted to point out some of the cues a little bit. Here's the follow-through days that we've seen recently. This follow-through day back in August was fueled by a JOLTS report, so that was a jobs data report. This one was, I think, on the heels of think this might have been on the another employment report on a Friday evening.
Non-farm payrolls, yeah.
Yeah. And then this one was a Fed day, I believe, right? This last one on November 1st was
Yes.
a Fed announcement. And so, you had two that failed. And I know we were all over it here and here because the stock setups were a little bit better. I think on this one, it was kind of hard to buy things because you had some things that were just kind of ewing around and not giving you exactly a pivot point, but you could have just bought strong stocks if you wanted. But it was, this one I think was easier to get long into, and this one has been a little bit more difficult. And it's just been, it's tough. I mean, people will see. I wonder how long people are in this room. But this one, looks like it could be the real deal, right? Especially with just the much bigger improvement in breadth that we've seen off of this low, in particular, and right here in the last 5 days, we just didn't have stocks that gave up anything, right? It's been difficult to buy, and but it broke out of this trend line, which we knew was important, and we've been looking at that trend line for a few months now, and it finally did, and it looks like it could be off to the races. Okay, and then I just thought this was funny too. When bad news hits, it kind of another character change thing. Um, right, we got this U.S. credit downgrade. I think that was August 1st, and that was kind of an excuse for the market to like sell off at the time. And now this one, we get that I think another credit downgrade. Maybe it was Moody's, right? On Friday, and then Monday the market really doesn't react at all. And then Tuesday we get this action. So that's exactly the kind of thing you want to see, right? You want to see bad news shrugged off, and we rally new highs, despite any bad news. So that to me is, it's telling. It says something important that the bears might want to get out of the way, for I don't know, for now. Okay. Yeah, here's a look at the FFTY. That's the IBD 50 index. And it's just turning up. It's kind of been a lagging index. Roy, did you want to talk on this on the FFTY? I have a daily and weekly chart for this one.
Sure. And there's been quite a bit of debate regarding whether or not this benchmark is worth anything or not. But I assure you that it is, for following the IBD 50 in the process for many, many years. But what is amazing is how estranged this index has been, and the wide dichotomy between big cap tech, those seven magnificent seven, and really what's going on under the surface. And I think we'll be able to go back, as we do after all these major bear markets, and study the past. This will be one of those times that we had just amazing distribution, in growth underneath the surface that was masking what was happening in the overall market. So I think that's useful information to know, just because it provides you context to let you know, well, what should you be doing, and why isn't growth working? Why are stocks that have canceling characteristics, why aren't they powering ahead to new highs? There's a time and a season. That's all that I can say. And after this season of underperformance, I think that the breath coming off the bottom here is going to provide us some great opportunities. Most people are worn out now. Most people have thrown in the towel that have been in growth, but I assure you that these bull markets provide scores of true market leaders coming out of bear markets like we've just experienced here in the FFTY. I think this FFTY, the index actually dropped, I think, close to 57%, which is unprecedented for as long as I've followed it. And look how this looks on the weekly. So that's telling you, if you're an O'Neill disciple, and believe me, you have many wealthy, independent O'Neill disciples across this land that have gotten rich by buying stocks that are breaking out to new highs, that have the characteristics in CanSlim. And this is not going to be any different. And this is just showing you, you can visually that, okay, there's probably an opportunity here, in this strategy. There's, more than likely, you've had the majority of the decline. So for me and Wes, that gives us quite a bit of excitement, as we know that the good times are about to unfold, we believe.
All right. All right. Yeah, and this is the IBD mutual fund index. We sort of included here too. These are the top mutual funds according to Investors Business Daily, and you can see just how how they've acted. Say it's similar to the FFTY. It's the similar type of action.
And Wes, by the way, let me just note that this is a group that encompasses, I think there's 21 A+ rated mutual funds that manage billions of dollars that William O'Neill personally chose, that he thought provided the best, the best opportunities in terms of growth. And these typically have astounding long-term records. And you can see that going back to the December bottom here, again, you have no progress, over going back almost 5 years. So we think that you can look at the chart from 2016 to 2018, where you had 2 years of outperformance. The March 2020 bottom to the top, where the indexes were up 100%. And now we think that this is, you've kind of rechecked the bottom in the last couple of weeks. And this is in the mutual fund universe. And we think that this is going to set the stage for a period of growth in these top A+ rated funds. And if the indexes go up, you're going to find many individual stocks that go up 2- and 3-fold, because they're going to provide you with asymmetric opportunity, asymmetric risk.
Okay, and here's we'll go through these next 20 or so charts, maybe a little quicker, but this is what we look at every month. And again, we'll send out these slides. We'll send out an email with these slides attached tomorrow. So this is the NASDAQ and the MACD, just a momentum indicator here. And when this black line crosses the red line, you've got a buy signal, and that buy signal did occur, I think, on the follow through day in November 1st, or maybe it was the following day, but still on that, still not overbought, on that indicator. Still have some ways to go. This is the NASDAQ and moving average crossovers. So the yellow line here is the 50-day. That could be turning up. Did we say it turned up today, Roy? Do you remember the 50-day? It was going to, or it was close, maybe by a penny.
Yeah, I'll have to. Oh, it did. Yeah, it did turn up. Yeah. Well, it turned up on the Qs, I think, by a penny. I'll have to check the NASDAQ.
Yeah. So we're close anyway. So, we know we're above the 50-day, right? That happened a couple weeks ago. We know that the 200 moving day average is 200-day moving average is still up. We know the 50-day should be turning up soon. The 10-day, this green line, is above the 21-day. That's a mode of, or a measure of trend we like. And so now you're in full kind of agreement with the trend, full alignment of all these moving averages. And it's exactly what you just need, really, for an easy dollar environment. We'll have a longer term chart, I think, later with this index, but you can see, right, this is, let's say May 15th. It's not, you don't get the whole picture, but the whole point is we know it was an easier dollar environment for 2 months. And the whole time those things were true. The 10-day was above the 21-day, 21-day was above the 50-day, and all of them were sloping upward. So this is, this is why it's encouraging, because this is what you need. These are ingredients, and that's it. The trend is turning and more positive now, and that's why we're more excited about what could happen.
Wes, let me just talk just a minute, make a note for the viewers regarding the power trend. Mike Webster, who was a portfolio manager at O'Neill Securities for many, many years, many of us in the community know him. And he designed, along with, I think, Justin and probably a couple, David from IBD. They designed a course called, the name of it was, I think, Market School. And one of the things that they pointed out were these brief periods of time when the market is in what's known as a power trend. Back up, Wes, one more slide, to go back to the NASDAQ. And these were brief periods of time that were very, very bullish indeed. And it was determined by the following factors. The 10-day, the green line had to be above the magenta line, the 10-day above the 21-day for 10, you had to be above the 21-day for 10 consecutive days. The 10-day had to be above the 21-day for 5 consecutive days, I believe. And then the 50-day, the yellow, had to be in an uptrend. That had to turn up. So the 10-day is we're above the 21-day. Let me see, there's 1 day, 2, 3, 4, 5, 6, 7, 8. This is the 9th day. So we're above this is the 9th day that we're above the magenta line. So one more day, which will certainly happen tomorrow, we will be hitting that characteristic. And then the 21-day above the 50, that's the magenta line above the yellow line. This is day 2, I think. So it's possible that by Friday, the 21-day will be above the 50-day, 5 straight days. And then it's possible that the yellow line actually turns up. It just needs to turn up 1 day. And that puts you in a power trend. And so that's a very strong buy signal that's worked historically. And of course, you go to a sell signal when the 21-day goes back below the 50-day. When you go to the 20-day, 1 day crosses the 50-day on the downside. Or you have something called circuit breakers, where you're down either 10% from the top, or you're breaking the 50-day on volume. So that's important. You can Google that, or you can also go to investors.com and search for power trend, and they've got some great historical information so that you can look at, well, what's going on now versus periods of time in the past, and see what that potentially means. Emphatically so, because we got these wide market thrust signal as well. So that's important.
Thank you. Oh shoot. So okay, this chart, the NASDAQ and 30-week moving average, we know we've talked about this as a long-term trend. Things were dicey these 2 weeks, right? When we talk about this trend changing, we think about 2 weeks below the 50-week or 30-week being, starting a new downtrend, and then getting back above it, starting a new uptrend. And so, we were defensive for sure right here, not knowing, what was about to happen. Obviously not knowing that, this is a measure where the trend could have been changing here, and totally got reversed. So, on this measure, we are back in a long-term uptrend very quickly. Okay. And we talked about breadth improving, you know, the IWM being just a huge mover today. And you can see this strong move off the bottom in breadth. This is the S&P and stocks above their 50-day moving averages. Now we're up at 66%. So a real quick move in 2 weeks from, you know, the lows of 15% or so to 66%. So really, really powerful move with a lot of participation. This is the S&P and stocks above their 200-day moving averages. Also seeing a big move here, an improvement there. So from 30 or 28% or something to 51%. And the NASDAQ, here's the stocks above their 50-day moving averages in the NASDAQ. Also, you know, we talked about this, I think, last month too, how we were really washed out on that measure. And we ended up rechecking it October and November towards that 18% of stocks below their 50-day moving averages. But in 2 weeks, that's improved quite a bit, right? From 15 to 45% in just a couple weeks. Okay, and then here's the stocks above their 200-day moving averages in the NASDAQ. You know, we did draw this trend line here. I know back when we did a presentation in June, and you could similarly do something here. You know, the same thing where it looks like we're about to launch. And I just would emphasize again, I think what this really should, you know, remind you of this kind of action, right? This kind of ramp action where if we, you know, it's important not to buy extended because you should get time, you know, even though you think you're not at the moment, if you're under invested, I think you will get, you know, an opportunity because we have gone straight up. I mean, people are going to take profits. Like that's a really, really big move in a short amount of time, which is great. But just don't buy extended. Okay, and here's the net new high number. This also saw some pretty good improvement today, but this is the NASDAQ only, and this had actually 6 net new lows on the NASDAQ. Still, you know, still better. And if we have another up day tomorrow, we'll probably see that turn positive on the NASDAQ. And you know, that will be the start, hopefully, of something longer of net new highs, some longer term move of net new highs, which would be great in a healthy bull market. But here's actually the New York Stock Exchange new highs and new lows. So the New York Stock Exchange actually saw 100 net new highs. So, right, I think the overall market would then be somewhere in that vicinity, right, of like 94 or so new highs in the market. And so, you know, you saw this period from June through July, you know, much better environment. And so maybe we just started that right here. And you know, I threw this in the New York Stock Exchange longer term 5-year chart, just turning positive here with today's big day. Okay, and here's a McClellan oscillator. This is our one of our preferred daily overbought, oversold indicators. And just after today's action, we're back in that overbought territory. So something to consider. You know, we were overbought 8 days ago, and you know, barely got a pullback with that. But we're overbought again. So just, you know, you should be mindful. You know, today maybe wasn't a day to add a lot of exposure because it gapped up on you. And if you look at the, you know, intraday action too, it's not like you made a lot of progress from the open to the close. It was really all overnight. So just, you know, something to be mindful of buying in an overbought market. Okay. The VIX, this was a real character change with the VIX as well. You can see when it kind of broke straight down 3 days through the 200-day, through the 50-day average of the VIX, and 1, 2, 3, 4 5 straight days, you know, down quite a bit. And back in this back in this range that we want to be in. It's really, really nice to be trading in an environment where the VIX is, 15 to 18 or whatever. That's a much better time for stocks, and that should give you, indication that we're in a different environment. This on its own should tell you that. And hopefully we get longer than 2 months, right? Last time we only got really two really strong months. But yeah, we'll see. But this is telling you something as well. It's confirming a lot of what you should be seeing in individual stocks. Okay, and here's some more sentiment indicators we look at. This is the National Association of Active Investment Managers survey. Down here, this tells you how long active managers are. And so in the latest survey, this is put out every Thursday and gathered every Wednesday. So last week, we saw that active managers were about 62% long. And that was a big change, right, from the 20s, which I think we talked about maybe we didn't talk about it last month, but when you get in the 20s, that's a very, very, low range. And so it's actually done a pretty good job of telling you, when things are very oversold too. So we're kind of fluctuating between this oversold and overbought, but you should have seen the sentiment kind of getting particularly bearish. And now we're at 61, so it's been quick to move. And I think what's interesting too is the next slide, how quickly this changed. I don't know what to think about this. The volatility in this sentiment is a little bit crazy, where we had bears go from 50 to 27% in a week, and bulls go from 25 to 43%. So, a really big, quick drop. And I guess it just goes to show you that price is really what creates the sentiment. Because, you're not going to sit here and be bearish if stocks are up for 3 straight weeks. And here's a number, the net number of bulls versus bears. So you have a little bit of a net bullishness now after the last couple weeks. Here's a put call ratio up top. So the higher this ratio, the higher the puts to calls being bought, the more fear there is. I think this is kind of showing you. I know we highlighted this spike too back in October, right? Because that was clearly a meaningful spike. And then we went on to actually make a lower low in the indexes. But the complacency has not really started to build up. We've still stayed relatively high in this ratio, in spite of a really big rally too. So I think that bodes well for the rally kind of continuing from here. And this showed us an even bigger spike recently. This is the equity put call ratio. So just looking at equities, and this made move higher than this October spike here. So there has not been, based on these things, there's not been a big buildup in complacency despite the rally, and really should. And I think it's telling. I think it's telling that there's a lot more room for complacency to come in and fuel a rally into year end. Not to mention FOMO that you might be having for to make up for the whole year in 6 weeks. Okay, and a couple more here. This is the high yield spread. This is a measure of credit risk and kind of a measure of fear in the market too. I'm really telling you, if there's a worry about credit worthiness across the economy. And this collapsed recently, right, which is a good thing. In November 1st. Came down quite a bit. This is only updated through yesterday too. This data was a little bit slow, so I would be curious to see what that did. I would be curious to see what that did today, if it did anything. But it's still not updated. So, anyways, I'm guessing that came down as well. Further. So telling you that the credit markets are kind of seeing what you're seeing or what equity markets are seeing. So they're in agreement, which is nice. Okay. And then I just kept this in here. There's two more slides. Crude oil was like the hot topic, in July, August, and really September, right? Like when we had that kind of that pullback in the market. Oh no, inflation's accelerating, right? What's going to happen? Who knows where oil is going? It's going to 120. Well, of course, oil fluctuates. Now it's down. Rates are down. The same people that were shouting about inflation be accelerating again should be talking about it decelerating now. They have to be, if you're being fair to both sides of the argument, this is and I'm going to take even less stock in, I'm going to put less stock into this in general because it's just a volatile asset at this point. It's not really it's not really the story about inflation. Inflation is not really the story now, I don't think. With that, but also, wanted to point out this meaningful break in the U.S. dollar. If you watch, I don't, we don't trade the currencies often. Maybe somebody here does, but I think the best stuff that works with currencies is the commitment of traders report. If you guys are familiar with that, it's where you can look at crowdedness. And there's a guy, Jason Shapiro, who I follow on Twitter. I think is excellent, and he talks. He's really good at taking the opposite trades or the opposite sides of crowded trades. That's his whole thing. And he does this by looking at futures positioning, which is public data. And so, anyways, I think the dollar had become a crowded trade. And this is broken right now, right? If we're looking at it like a stock, it broke the 50-day on heavy volume. You can see what happened here. You get this choppy action and then a break of the 50-day. I think there's a good chance that we're in for lower, a lower move in the dollar, for a multi-week move in the dollar lower. But I think that is it. Now,
Thank you, Wes. Let me make a couple of points. And thank you for that, all that work, Wes, and putting the slide deck
sorry
together.
about my voice. I hope my voice wasn't too much of a bother. It's driving me crazy.
I think Wes was at the Keys for a wedding this past weekend, and I think he got COVID. So we'll see. I'm hoarse myself. Yes, I wanted to point out just a couple of things. The first thing is that Wes showed the chart, and go back and look at those follow-through days that were annotated, because we had the last two follow-through days that failed, but the last follow-through day, the NASDAQ was up 1.62%, and volume was up 6.76% higher than the day before. Contrasting that to today, the NASDAQ was up 2.37%. Volume was up 22.6% today. It really feels, and it felt like the train's leaving the station. And those are many times that breath that you get, that market thrust, where the market stays overbought, is a signal in itself. And Shavako Capital does a lot of great work showing how fast the market goes from an oversold to overbought condition in a very brief time frame. And that shows in the past, over the time, that momentum typically continued. So with the breadth in the market and stop participation increasing, there's a very high chance that we're going to get this year-end rally. People pile in, but you're going to have to pick your spots on, as you look at individual stocks. So, and of course, that's in every case. But this, more safety can be achieved by buying stocks that have already reported their numbers and also focusing on those stocks that are making new 52-week highs or all-time highs. That's where the leaders are going to come from. It's not going to be a stock that's down 90% and it rallies from $5 to $10. It's going to be a stock that's $70 that goes to $350. It's going to be a stock like NVIDIA, which we happen to be out of it. We got stopped out of this, that goes from 500 to 650 in the next earnings cycle after earnings reported next Tuesday for the next 13 weeks. And the institutional stocks, the stocks that are higher prices, have more quality there. And that's where the institutions are piling in. So you want to have volume behind the moves as well. So that's something that you should be concentrated on. Volume is very, very important. Now let's take a 5-minute break. We'll come back and then I'm going to show you we have 75 stocks that are on our focus list, and you can take a snapshot of that because I think this is where you want to be in this powerful group of leading companies between now and the end of the year. Then it's a matter of like, where do you buy them? How do you add exposure? But we're going to give you a great list that we think that these are the stocks that you should be in between now and year end. So let's take a 5-minute break and we'll come back at about 8:16 and then we'll get into the individual stocks. Okay, guys, let's go ahead and get started, and we'll hit the meat of the program now. Let me share my screen with you. Okay, you should be looking at my MarketSmith screen. Let me have some feedback. Are you guys seeing a list of stocks here on your screen currently?
Yes.
Okay, great. Okay. So we wanted to put, this is in alphabetical order, not in any type of ranking or whatever. You can take a screenshot. We've got 75 names that we think you should be paying attention to right now for a multitude of reasons. Typically, they have high relative strength and high composite ratings for many of them, and they are near or close to making 52-week highs or all-time highs in price. So here's the first 35 names, and let me go down. This is the next group of names. Take a screenshot of this so that you can go back and study these stocks, study the setups, take a look at their fundamental factors, take a look at the technical setup as well. And finally, the last 5 stocks here.
Roy, sorry, can you show again the first group?
Sure, absolutely. First group is right here.
Thank you.
You're welcome. Okay, so what we're trying to focus on, guys, we're trying to focus and find the true market leaders. That's our focus list right now. I'll show you what we have in our portfolio right now. This is what we own currently. And starting with the Qs, we actually bought the Qs on the follow-through day right there. We took a 10% position in the Qs right there to initially get market exposure. And you can see that we haven't felt any pressure whatsoever since we bought them on the follow-through day. And there weren't a lot at that particular time. We didn't know if it was going to be another false alarm, but we had to buy something. And so we were only, I think, maybe 7.5% long at that time, maybe with 3 stocks, 2.5% positions in maybe 3 stocks, because we were out of the market as the market consolidated and continued to be in this short-term downtrend. So we added exposure right there with the Qs. We think that it makes sense that you can add more Qs on a pullback. We would certainly like to increase our exposure on any type of market pullback that persists in the upcoming days, and we will have that. Let me put in the IWM. We actually bought the IWM today. But let's talk about the individual stocks. Here's CrowdStrike. And you can see on MarketSmith, it's got impeccable fundamentals when you look at the earnings growth, the revenue growth, the composite rating, which is 99, strongest that you can get, the strongest earnings per share rank that you can, that Investors Business Daily provides, along with the 98 relative strength. This means that this stock is outperforming 98% of stocks in the market. We have found over the years that if you concentrate in the top 90s, you're going to get the best performing stocks. You don't want to be in stocks that are lagging, that are under 7, that have under a 70 relative strength. They just muddle around and don't go anywhere. And echoing that thought, We never buy stocks that are making new 52-week lows. We have found that the only way that you can double the stock price is for the stock to continue to make new 52-week highs. So that's what we're constantly screening, and we're constantly screening the stocks that have the strongest relative strength, and this is one of them. So you can see the stock was in an uptrend, pulled back in the market as the market pulled back, and then it's powered ahead. This stock is extended, and you do have a little bit of risk tomorrow as Palo Alto reports tomorrow. And in this group, you've had a couple of blowups. You've had Fortinet, FT&T, and you've also had OKTA that's blown up recently because of various security issues. But this is the number one stock in this, in a very strong industry group. And you can see that it's powering ahead after this long consolidation. It's powering ahead, and it's just in a very nice uptrend here. So CrowdStrike. There's the TLT, and again, we're in this TLT like right here at the 84, 86 area. Our average cost is, I think, 84, 85, something like that. And we think that you're going over the next year, that you're going to see a rise here in the TLT to this downward sloping moving average. And that suggests a price. That's a $98 price. So we thought that that the TLT paying 5%, and down here at 84 going to 100, basically you had a 20 to 25% potential gain over the next 12 months. And we still think that that's viable. The next stock we own is Uber. And we only have a 2.5% position here. You can see that this stock put in this somewhat jagged double bottom base, but it's going straight up from this 200-day moving average. So this is how it's changed dramatically in the last couple of weeks. And I found what's interesting is you can go back and study like these market bottoms, like at 2020, when the COVID bottom, and look at to find out who the best performing stocks were in 2021. And we owned a number of those in 2020, things like, and stocks that came off the bottom, such as Tesla, Shopify, Zoom, Teladoc, DocuSign, Livongo. They all had tremendous moves after the 2020 bottom, but you can go back and look at various times. You don't know who the true leadership is. Typically happens until you have brief, powerful moves where the stock is looking poorly, and then it reverses its condition and breaks out. So this is showing true power, and we're just looking at for this stock to come back in to like the 10-day moving average before you could add. They reported their earnings. They had a tremendous earnings call where earnings were up 116%, and certainly we know the power that Uber has in the marketplace today. So this is a stock that this is another reason that we like it. It's a turnaround situation. Look over here in the module on the left, the earnings module. You can see the stock had 4 straight years where they lost money, and only one profitable year in 2018, probably because of accounting charges. So it's really lost money since they came public 7 straight years. You can see something changed in this past year. You can see there is an earnings report. There's an earnings report. There's an earnings report. There's an earnings report. And we call these serial gappers that gap up on great positive earnings reports. The great true market winners have normally 6 to 8 quarters of beat and raise guidance. And we think that that's what's going on here. You just have 4. So we think there's plenty of power ahead over the next year, in this stock here. Another stock that's performing very well today is DraftKings. That's the earnings report. We have 5% positions in all the other positions that we currently have. And we would like to go even heavier, but we're just trying to get the portfolio situated to really identify those stocks that you want to have a 10% position in. You can see DraftKings broke a declining downtrend line on the earnings report as volume expanded. And you can see the stock went to a 52-week high. So the character in the market has changed. I think we had over 427 new highs today on FinViz, and that's the first time that we've had more than 100 in months and months and months. We've been in a period. We just broke a consecutive series where the new lows exceeded new highs for the most consecutive days that new lows exceeded new highs for 15 years. And so when you go back, think about all the activity in the market, and you pull out a number like that, where we've had more new lows and new highs for over 15 years, that just shows you the devastation under the hood with what's really going on in the market. That was, of course, broken last Friday, I believe. And so now we see that we see where the environment is becoming more favorable. You can see DraftKings powered ahead, made a 52-week high, pulled back, and then it had this nice outside day to the upside today. There was a news article, and it was just it was old news, a Financial Times article talking about competition for ESPN old news. And so you can see this is first out of the gate. So new highs, it's an IPO, and we love these IPO stories that turn around and that can get into new high territory and make all-time highs. And they raise their guidance actually for the next couple of years, all the way. They raised their guidance for 26 and 2028 as well, that created this powerful move up. So you can see that this is a trend in the leisure gaming area that is going to continue, and they're by far the gorilla in the space. Vertiv Holdings, we've been a long favorite of this company that most people don't know about. You can notice by looking at the data block, this is a company doing $6 billion in sales that nobody knows about. It's a $16 billion company, and they provide a number of products for data centers. As you know, the AI data centers are quite sophisticated, and they're quite powerful, and they provide much heat, and that heat needs to be suppressed. And one of Vertiv's primary products is to provide cooling equipment for these data centers. And as these data centers get bigger, more complicated, require more power, you need more cooling modules. And this is the company that provides these cooling products to the data centers. Their largest client is Meta and Microsoft. So you got two powerful partners there. You can see that the company has got 4 consecutive quarters of triple-digit numbers. Remember CanSlim, you're looking for 25% earnings growth. This is a company that's providing triple-digit earnings growth. In my career, I've always focused on these companies that have triple-digit numbers. In fact, when I met David Ryan in 1988, I asked him, where do you get the most powerful? How do you win the U.S. Investment Championship for 3 consecutive years with 150% gain? That's why I reached out and wanted to find out what this guy was doing, and come to find out that he was buying new highs, buying breakouts. And as a protege for as a protege from William O'Neill. He was buying the stocks that had the strongest earnings per share rating and the strongest relative strength. So 99.99 were stocks that provided powerful moves for him back there at that particular time, back in the 80s and so forth. So I've always watched and looked at those stocks that have the strongest earnings per share rank, along with the strongest relative strength. In fact, in O'Neill's work, all the true market leaders had at least an 85 earnings per share rank and an 85% relative strength rank. And they were within 15% of their 52-week high before they embarked on their major appreciation. So you always want to look at stocks that are within 15% of its 52-week high, that have at least an 85% earnings per share rank and an 85% relative strength. The earnings per share rank, many times it's not as important today because of growth, organic growth, and many growth companies like Amazon did not have earnings for many years. So because they were putting their money back into the expansion of the corporation. But relative strength never lies. So relative strength shows how the stock is performing relative to every other stock in the universe, which is the most important ingredient in selecting a true market leader. So you can see VRT, triple digit numbers, and the stock's going into a 52-week high today. Nutanix, another stock that maybe many people are not aware of, that's doing $2 billion in revenues, a $10 billion market cap. So it's right here in the sweet spot. And what Nutanix provides, they provide the search criteria and search platform on corporate websites. So they're like a Google. They provide the back operation for searching on business enterprise networks. So you can actually go to IBM, for example, on IBM.com, and there'll be a search criteria where you can search for products, who their clients are, who their relationships are with, their financials, the public relations, and that's all powered by Nutanix. They're the leader in this group. Notice the strong earnings growth, 168%, 600%, 400%, 240%. And notice also that you've got this acceleration in terms of earnings growth. O'Neill found that some of the great winning stocks in the past had 3 consecutive quarters of earnings growth before they powered ahead. And you can see here, even though this company has had 2 great quarters for the first 2 quarters of the year, that you've had 15%, 400% earnings growth. You have a gain of 24 cents, and they report in 16 days. So we're looking for a great earnings report, in 16 days to power this stock higher from here. So it's got great action, 96 relative strength. You can see where the stock's breaking this downtrend line that I've drawn on the chart, going into a 52-week high territory today. Many of you are aware of Pinterest. So this is a stock that's powering ahead to a 52-week high. They reported the earnings 10 days ago. Notice where this stock, look how poor technically this stock looked until 10 days ago. See, that's what's happening right now. That's why we're so excited, is that we're identifying these stocks like right now they're on the launching pad and they're ready to go. And they've most of the stock, I think everything that we've bought, they've already reported, or they're far enough out that we should have a cushion going into the quarter to potentially hold the position or not. But we like the idea that Pinterest moved to a 52-week high on its earnings report. You can see it's consolidating here at 32 with the great earnings. You know, the last two earnings reports were quite positive. Palantir, this is a stock that's been that provides security technology, artificial intelligence to the CIA, the National Security Agency. And they provide the intelligence networks for our military, and they're well known, and they've got a great stem winder, a great CEO of the company. And from the last earnings report, and we were in this stock back here we bought this stock here at $11 and we bought it all the way up and ended up getting stopped out here as the company had a poor response to the quarterly earnings number. This was a company that was talked about quite a lot, having to do with artificial intelligence. And the CEO of the company said, listen, we're the leading AI firm out there. We've read some great research reports from Wedbush, among others. But the stock just didn't, stock had a good earnings report, but they were very conservative in their guidance. And the market wanted them to have a beat and raise quarter. Notice the difference in terms of this earnings report. You had the same earnings beat of earnings were up 600%, but notice on this earnings report, you had a negative response, while on this earnings report, you had a positive response to the quarter. It's not what the company reports, it's how the market reacts to the earnings report that's important. And we bought this stock right there at 19. We bought it back at 19. And we're contemplating pressing the position up here at 2024. We just haven't we didn't pull the trigger yet today. It's right there. So we're contemplating adding to this position, right, which would probably be tomorrow if we break out, to new highs. But, that's something that Wes and I will discuss and talk about. And of course, Lilly and NVO are two major players in the largest drug that is on the market for weight loss. You can see that both Eli Lilly and Novo Nordisk, they have products, weight loss products that are receiving rave reviews, have a beneficial impact for those that have diabetes, as well as cardiac problems. And the numbers are actually staggering. People that have been on these two drugs for those companies have they've had an efficacy of dropping 25% of their weight in 12 months and sticking with it. So you can see, sort of like baldness, you get a drug that can cure obesity. That's going to be as big, that's the biggest market that you potentially have. So we have high hopes for this blue chip stock moving forward. And I will go over just a few.
Right.
Yeah. Yes, go ahead.
What?
Yes, go ahead, Brad.
Oh, I'm sorry.
Did you have a comment?
No, I'm fine.
Oh, okay, those in the background. Okay, let me point out, guys, I've got 26 stocks that we're looking at, right? We just went over a number of these that we've owned, and we think that you should, pay attention to these, as well. So Nvidia, you had what's known as a undercut and rally here. And I had a huge position in this stock personally and got stopped out of it. And despite, despite the price increase and raises from Wall Street, this stock just had this brutal correction from 476 to 392. And it finally turned here where it undercut this big round number of 400, put in a low of 392, and then and then powered ahead over the next couple of days. And this stock has just gone up, I think, 10 straight days, 3, 4, 5, 6, 7, 8. I think that's 10 straight days. And David Ryan has an indicator called the ANTS indicator. And the ANTS indicator is when it occurs when you have a stock that goes up 13 out of 15 days. And you would think that the stock was due for a pullback, but that in fact has led to some of the best moving stocks out there. And you can see 1, 2, 3, 4, 5, 6, 7, 8. 10 straight days. So this is most assuredly is going to hit that ANTS indicator, but earnings are Tuesday. And the last time that they reported, the stock sold off right there. So the dilemma that you have with this stock is Wall Street has targets of $650. And you got stopped out of it. And now it's problematic because if you don't own the stock and you don't have a cushion, and I have a 5% position here, but we don't own it for clients. But if you don't have a cushion, how can you potentially hold it into the quarter? But the numbers are going to be incredible. The guidance from the street and from the company is humongous. And look at the numbers annually next year. Look, this is a stock that's going to report $3 this year. And look at the numbers over the next 2 years: $9.90, $15.77. And I've been out there, in the Twitter universe and on these calls as well, thinking that, there is no question this is going to be $1,000 stock. But I thought it was $1,000 stock at 476. And, when the stock's plummeting down here, right where it turns, you're looking at the 200-day as a potential support on the stock. So what would be nice for the stock to pull back, for a few days going into the earnings report and then power ahead. And what you have to be aware of is that it might provide this type of setup on the earnings report next Tuesday, where the stock gaps up 10% in price and volume is up 300% or higher. So it is actually setting up that way for to have a terrific and monumental day next. I think it's Tuesday after the close, I think. So you have to watch it. This is by far the most important stock in the market today. So it's just, it's definitely a tough call. And congratulations to those on the call that own it. We took a loss today in Celsius. This is the only stock we've taken a loss in since the follow-through day, but it broke the 21-day yesterday. And there was some digestion today, and we sold it with the 10% loss. We had a 5% position as the company revealed that maybe growth was potentially slowing down a hair. TJX reported after the close. Looks like the stock is flat. You have a great VCP setting up on TJ Maxx. Duolingo they're known for their speech and language products. And this by far has had the most impressive reaction to earnings so far. And you can see the stock gapped up on a 115% earnings growth to a 52-week high. And this stock hasn't come in at all. When you see stocks like this coming out of a bear market and a correction, the power ahead, this by far, you can see it's got the best action of every stock that I've looked at in our universe. So this is one to keep on your radar. They also announced they were getting in mathematics and music as well. So you can see they've got they've got robust sales and, and triple digit earnings. So that's one to keep on your list as well. Shopify, who has an agreement with Amazon, powered ahead on their earnings report. This is the kind of congestion, and digestion that you want. And we would, I own this personally as well, and we were looking at buying this stock, but we did not buy the gap up today on it. But you can see that earnings are going to be up 1,600% in 2023 and 52% in 2024. You can see it broke the downtrend line. There's the volume explosion. The stock is close to a 52-week high, and they have they've got terrific numbers. So terrific numbers. They're doing billions of dollars a quarter. So they're doing $8 billion annually. And so this is what potential leading stocks coming out of a correction look like. Look how jagged and how wide and loose. That's how Bill would describe this chart. It's just wide and loose. It can't get going. It's in this downtrend, you get a brief days of where it can rally, only to be thwarted by selling. And then now we think that it's finally changed character right here. So keep that on your list. AppLovin, software company that's got a 99 relative strength. It was an IPO that got absolutely hammered in the bear market. You can see it's consolidating. They recently reported earnings, so earnings are out of the way. A couple of other names, and I'll turn it over to you guys. ServiceNow, and I'm what I'm showing you, trying to help you identify what the transition from bad to good, and if we're in the bull market that I think that we're in based on the action in the last 10 days, then these are the stocks that can potentially power ahead and double and triple over the next, the next year or so. And they're just launching right now. They just launched. So you have to be careful though, with, buying an extended stop, because they can easily come in to say the 10-day or 21-day. See, the 21-day, it's 9.3%. And if you want to keep a stop at, 8%, you're going to be right on the threshold of getting kicked out on a normal retracement, which, quite, often occurs after a move like the move that we've had. Datadog had Datadog had a great earnings report. And so you can see also, guys, I'm looking at the primary thread that Wes and I are identifying are companies that had a great reaction to their earnings report that aren't giving way. They're not turning around and selling off. Look at how this stock responded to this earnings report versus this earnings report. So everyone that got burned on the stock, that bought the stock before, that lost money, they all have been shaken out to lead a brand new group of institutional investors that now are accumulating the stock. Great earnings report there. This is a Chinese stock. They've got the app Temu that apparently is got maybe 100 million clients. And you can see the stock's got a very powerful earnings. They report though in 9 days, but it does have this nice VCP pattern that's emerging. And we actually, I don't think I had this in my other list. We actually own Ollie's Basement. We bought it yesterday. Earnings are in 16 days. They've got 2 great quarters. And for those of you that have been in an Ollie store, it's like a TJ Maxx, but like a Five Below and Family Dollar, and it's an outlet store. But they've got 2 straight quarters of triple-digit numbers. The stock broke out to a new 52-week high. That's what got us interested, in the stock. And the last one I'll talk about is Spotify. There's the earnings report. Earnings were up 141%. See, this is where I think we're seeing, this transition. We're seeing this transition where for CanSlim, we're buying, CanSlim, you're buying stocks that have great earnings. And, we didn't buy Google down here when it had minus 19% earnings, minus 11%. Look at Apple. Look at Apple. Apple revenue growth minus 1%, minus 1%, minus 3%, minus 5%. But look at what the stock did from January into now. And we totally missed this because it had no earnings growth or revenue growth. Like, why are we going to buy a stock that's got poor fundamentals? And it did not matter because that's just where the market concentration took place, primarily because they had robust, very strong balance sheets and very little debt. And institutional investors were basically hiding out there. And so anyway, that concludes this part of the presentation. I hope that you guys can go back and study. Of course, the list that I gave you is not everything, but it's certainly a great place to start. We've done a lot of work. So there are going to be some stocks on that list, a number of them probably that double and triple. And I hope you guys find them, as I hope that we find them for ourselves as well. So with that, we'll open the floor up and discuss any stocks you guys would like to talk about.
Hey, Roy. This is Tom.
Hey, Tom.
Yeah, I've been noticing that ants indicator, just like the one you got pulled up there now, Microsoft.
Yes.
So, it's developing still, but it's pretty darn close. So,
yes.
So what do you do with that information? Let's say it qualifies as an ants indicator. Now what?
If it's going to just come back, like, for example, I didn't talk about GBTC, about Bitcoin, but the strongest stocks, and you can see this uptrend, when GBTC broke out right here, and it broke out, and we actually tried this. We tried this for personally and for our clients. We bought this stock here at 21.80, got stopped out. We bought it back at 21.20, got stopped out. Then the stock broke out this last time. We didn't buy it, and it went up. And it's been in this very nice, very strong uptrend where it's been trading above the 10-day the whole way. And what happens in the strongest stocks, you can see where this broke today, like one day, in the strongest stocks that have the ants characteristics, you get like one day to buy them. So if Microsoft comes in one day and say it goes down one day, then the second day, particularly if it opens down, that typically might provide you an opportunity to enter. So this is going to be interesting to see. See, here's Bitcoin. So it just broke the 10-day barely, but if it hits the 21-day, that would be like, that'd be a 3-day pullback. And so you watch for the strongest stocks to pull back. Ethereum is another one. See, look how this Ethereum broke out at 12, moved to 18. Now, if I'm right, that's possibly the low on Ethereum right here. See, it's dropped from, the high was 1773 to 1610. That's percentage-wise, that's a pretty large drop from the top to today's low. So the strongest stocks, look for this, and the ants are going to provide that type of signature, Tom. And if that's the case, stocks like this that are just getting going, this should be bought right here tomorrow. And more than likely, you can hold this low right here at the 10-day. So just keep that in mind. And that's how you can utilize the ants. And again, the premier ants, you've got one right here brewing on the video. But but Microsoft has reported, they reported and had a good response to the quarter, and NVIDIA has not reported. And just, the art of doing this is that if you go back and you look at Zoom report, we know the number is going to be huge for NVIDIA, but stocks peak on their best number. Stocks peak not on bad numbers, they peak on great numbers. So my reticence on NVIDIA would be, well, man, the numbers are incredible. It's going to be, they raised their guidance by billions of dollars. Can that be their top quarter? If that's the case, it may mark the high right there on the number. But when you look at NVIDIA's 2023 and 2024, or 2024, 2025, that I've never seen a runway this large. Never seen it. And so this is the most powerful company in AI right now. And we do think that AI chat GPT-4s can change the world as well. And not just because of our opinion, it's because of what all these enterprise companies are telling us. Microsoft, by the way, and I don't think Wes is on the call anymore because of he's sick. But Microsoft in Office 365, I think they're charging for their customers, I think $25 a seat or $50 a person or something like that. So they've already monetized, and they're monetizing Chat GPT. So this is going to truly transform, the world. This isn't just just a fad. It's not a fad. It's not something that's going to end tomorrow. All these enterprise companies, from Salesforce to ServiceNow, they're implementing, artificial intelligence into their products for their customers. And by far, this is the most important one.
And I appreciate the answer, Roy. Thanks, buddy.
You're welcome. Joseph, what do you have your eyes on these days?
I don't own Uber or DraftKings. I wish I owned those. So I'm waiting for a pullback. Right now I own Duolingo, Palantir, Datadog, and you might laugh at this position I bought today, but I'm taking a nap at Tesla coming off the bottom. So those are my 4 positions, about 80% invested.
How did you buy Duolingo? Did you buy it on the buy?
I just bought the gap, like literally the opening price, and I put a 3% stop and it never hit it. So that's how I entered that.
See, I bought Celsius. They blew it out, and I bought Celsius on the gap up, and it failed. Immediately. I held it, for a few days, and then it broke down. But we're right there in that crucial period of time where you don't know if these stocks are going to hold their gaps or not.
Exactly.
Shopify held its gap. Duolingo held its gap. Celsius did not hold its gap. You just don't know. You don't know the power behind the stock. You don't know who's accumulating, what's changed there. But I wish I'd like to be in this Duolingo for sure.
Yeah. So,
but it could pull back right there to 300. Look at ANET, for example. ANET broke out, came into the 10-day, and now you got this 2-day move where it's powered ahead and it's taking out the resistance. And this stock moved up on the earnings report. And I'm sitting there looking at it as well, afraid to buy it because it's not at a 52-week high, you know, on the opening, but it just powered ahead the next day. The stock has come in a little bit on guiding Wall Street's numbers down to like 10 to 15%. So, you know, the numbers that the company has achieved are quite remarkable, you know, quite excellent. But they've spent some time trying to lower Wall Street's expectations, and there's an art to doing that without clobbering the stock. And so I'm not exactly sure. Same thing with the SMCI. I'm not exactly sure about the fundamentals, you know, now. But there's a Bible gap up that worked. And these Bible gap ups, they're powerful entry points that have resulted in probably at least half of my profits over the trading years. There's stocks that react forcefully to the earnings report, and it just doesn't come in at all. You know, and you can immediately move your stop to break even, and then hang on for the ride for a longer move.
Yeah, and I mean they don't all work. Like I tried, I think Upwork. I mean, I don't even know why I tried. It was a gap up and I got stopped out. You know, you get stopped out of some of them, and you know you don't.
Yeah.
So, but the gains you get on the ones that you don't get stopped out outweigh the losses you.
They do. Yeah.
Hey, Roy,
Go ahead.
I'm sorry to interrupt you guys. Were you done or?
Yes, Vaughn, go ahead, Vaughn. Nice to hear
Go ahead,
you,
you're good.
Vaughn.
Hey, Roy, thanks for putting this on as always. Hey,
Sure.
I got a question for you. You mentioned TLT. Are you seeing any other interest rate sensitive groups that you like right now? And I realize they might not conform to, to the Can Slim metrics necessarily, like REITs, home builders, like anything interest rate sensitive you're interested in?
Yeah, well, yeah, I think I like the utilities here. And this is one of the reasons that we bought the TLT is that when the TNX was coming in, and if you could overlay this, and maybe I can overlay it, utilities were going down because the TNX interest rates were rising. And when the TNX, let me see if I can put a comparison. And basically, I like utilities, and I don't follow the REITs that much, but you can also you can follow the companies, the private equity companies that are benefiting from the lower interest rates, like Carlyle and KKR, utilities, REITs, and the banks, and the home builders too. The home builder, we're considering, Pulte and DHI right here. Let me put in see if 0TNX. See if this
even looking at VNQ, which is deep in its base, but as long as you get the interest rate part right, it's kind of idiot proof.
Which one is that?
VNQ, it's an index of all the REITs, I think, in the US.
Okay.
ETF, VNQ.
And it probably it's probably paying a great dividend as well.
Yeah. Also, I mean, it was up 5% today. I mean, that's a significant move for that thing.
VNQ.
Yeah.
Yeah. Yeah. So that is an interest rate issue. I guess from an investment perspective, Vaughn, the question you may ask is, these instruments, you're going to make more money in growth stocks than in these subsidiary companies, these other sectors like utilities, REITs, and so forth. And the question is, can I make more money in bonds if rates go to 4%, getting paid a 5% coupon, or in a growth stock? You're going to make more money in stocks, but there is an element of stability and risk avoidance and diversification that each of us must employ in determining our asset allocation mix.
Yeah, and that's where I'm at. And I realize it's not really what this meeting's about.
Yeah.
but yeah. So anyway, yeah, I was delighted to hear you talk about TLT. But
Yeah, well, great. I mean, I think it's, I think it's attractive more so. I think, Vanguard in their quote model portfolios, they have a lot of this BND.
Mhm.
So this has been one of those instruments that has been tough that bond funds can't out. This is like the S&P for bonds.
yeah,
The AGG is the AGG is really the benchmark for bonds, and everyone owns this, like in these models. And I think there's great upside here as well. And I mean, look how this has dropped from 120 to 90.
yeah.
I mean, the largest drop in 20 years. And just from a mean reversion, you just common sense should dictate that, man, we probably just saw the low last month or last.
Look at this
you know.
one, EDV, Edgar David Victor.
Oh yeah,
I've been buying 20-year Treasury zeros, the actual individual bonds.
yeah.
So my duration's 20. And I own this for a little while.
I bought it as well.
Yeah. I mean, it is like owning VGK. I mean, it is volatile, or VGT.
Yeah. So no, this is this is interesting, this structure, because it pays a dividend, but it's based on zero coupons. So it's zero coupons going out 30 years, I guess. But it pays a dividend somehow. But it's a play on zero coupons. It's the most aggressive way that you can play a decline in interest rates.
Yeah.
And look, just looking visually at it doesn't take a rocket scientist to guess that, based on sort of the macro environment that we're talking about, that's probably the low right there. And where's the upside? The upside is anywhere between 80 and 120, and you're getting paid 5%.
Yep. Yeah, and you can make some real money in a hurry. My timing was off. I added to the position. Just my ad from probably 10 days ago, I'm up 13%.
Yeah.
And so, yeah, I mean, yeah,
that's a great entry point, great trade. This is just one of those situations where, we're typically buying. I mean, we're typically buying stocks. We're buying stocks that have strong relative strength. But, this is the first time I bought bonds in 5 years, maybe. And just because it was such an outrageous example of the asset class just puking up. It's rarely do you see something like that. So I think there's much more upside here. So you can clearly see that if if this stock goes to 80, you have another 20% upside here.
I also noticed, just from a sentiment standpoint, like a week or two ago, as we were kind of near the highs in rates in the TNX, a lot of the opinion was that, we could easily see 7 or 8% now.
Yeah.
I mean, it sounded so absurd. I thought now,
It was difficult. We pulled the trigger right there, but it was difficult pulling the trigger when we heard the same thing.
Yeah.
Mike Santoli, or not Steve Leisman, not Mike Santoli. There's another guy.
Rick Santoli.
Rick Santoli. Yeah, he was saying we're going, bonds are going to like 10%. So shouting from the rooftops, bonds aren't going to 10%. That's probably the high right there in rates.
We also had Janet Yellen come out, I think this morning or yesterday at the APEC conference, basically acknowledging, like, we need to get rates down in order to finance and there's an acknowledgement on the world stage, in order for our math to work, for very long.
Yeah, it's that's the easiest way of one of the easiest way.
Well, I got a question with Uber. It seems to be next in line to draw that.
You're cutting out.
They did.
You might post something in the chat box. Brad, your microphone is cutting out.
Am I cutting out there, sir, Roy?
No, I think
I hear
Roy is.
you now. I hear you.
Oh,
Yeah, what was your question, Brad?
okay. Yeah, question on Uber was, they seem to be, there's a lot of talk of them being next in line for the S&P 500 to be
Oh, yeah.
added to.
Yeah.
Question is how do they determine that? Like, how do, I don't know if that's me or.
Yeah, I dropped you, Brad. I apologize. Do you guys hear me right now?
Do you hear me out there?
Yeah.
You're
Uber,
good. It's very disconnected.
Oh, okay.
Here, I think it's Roy's connection.
Oh, that's Roy. Okay. No.
yeah,
no
it is
problem.
my connection. This is my internet connection is unstable right now.
This meeting is being recorded.
Guys, I am having trouble with my internet connection.
What's burping with that?
Yeah, Mike, I am having problems with my internet connection. It's unstable.
We got you there. Can hear you now.
Guys, I'm having trouble with my internet connection. We'll see if it rectifies itself. Yeah, Uber, you could I don't know the exact parameters, but remember when Tesla was talked about in terms of being moved to the S&P 500?
Sorry, I lost you there again.
Is buffering again.
Okay. I am having problems.
We're losing you again. Yeah. You're not.
This meeting is being recorded.
Guys, it's my internet connection. I'm having an issue.
Right, try to dial from your phone.
Try to dial from my phone.
Yeah.
Yeah, you can use that instead of the audio, Roy. Instead of computer audio, you can actually dial in from how do you find the phone number from the dial into though?
No,
Yeah.
it's just same link.
The same link. Okay, let me try this.
Right now seems to be okay, Roy. You try again.
Okay.
I think you're back. I think we see you and everything. We might be good. I hope so.
Yeah, I don't know how good. Okay, you guys hear me?
You can also try to turn off your camera.
Turn off my camera. Let me see here. I'm gonna check my Zoom link, guys. Give me a second. Can't minimize.
Roy, you could be good now.
I'm good now. Testing, testing, testing.
Yeah, seems to be.
Okay. Well, guys, we'll see what we can do here. Carry on.
All this good news is wearing out the modem.
It is. Okay. Okay, guys, go ahead.
First, ELF, you made a great call last time. What do you think? If is it broken or is it still interesting? Because it went down after your call, and now it seems to be going up.
My internet.
No, ELF.
ELF. Okay.
Mhm.
Yeah, this Elf Beauty, this was this is one of the strongest stocks in the year in the uptrend. And this potentially is a stock that peaked on peak earnings. So you can see that the earnings had this great quarterly increase. And you can see what the stock last quarter in June had $1.10 in earnings. When they reported, see, this is how stocks peak. See, that was peak earnings, 182%. And you can see that quarter to quarter, they sequentially declined, but you didn't know it then. See, there's the stock, and that's what you have to be careful of that might happen with NVIDIA.
So would you consider it now, or
I would not consider it now because it's below a declining 50-day moving average. And so, if the stock moves higher, you can get what's known as like an angle warning. It's below the averages. So the 10-day is below the 21-day, 21 days below the 50-day. It's below the 50-day. I would consider it. It just needs to be, it needs to get above the 50-day. I wouldn't buy it here. But if it powers ahead, then potentially the stock could resume its uptrend. But technically, all this move now, this is downtrend action. This is a stock that's in a short-term downtrend, and you can clearly see that. So it's got to get above this, this area and move higher. So it's not the strongest candidate now. It was, one of the most powerful movers, this year. So, stocks, they typically go up, 4 to 6 to 8 quarters. And I'd have to go back and look at the numbers, but this is you got 5 quarters of excellent returns. That's how stocks peak right here. So I'd be very careful with this one.
Mm-hmm. And second question, thank you very much. Second question is, what do you think instead of buying indices like QQQ to buy futures, and it's 50% leverage, so you can keep the rest of the money in bonds or money market, earning 5%?
I've never bought futures. Very, very rarely have I ever purchased options. It's just not in, it's not in my wheelhouse. So, I think, for me, margin provides plenty of leverage. So, I don't need more. I mean, you can have a 200% position on margin on your stock portfolio. I don't need to use 200%. And then you have 400% intraday if you want it. So I don't really want, more margin than two times. The easiest way of blowing up is for a company to give you, 10 to 20 times leverage, and then it drops 3%, you go broke. So it's just not my wheelhouse. And, futures are options, but I'm sure people on this platform.
No, I don't want to leverage. What I want to do is I want to buy up to amount in my equity, but you don't need that much money. You can keep them and earn 5% on them. plus there's the tax benefits.
Yeah, I don't have any experience. I'm sorry.
Yeah. Okay. Thank you very much.
You're welcome.
Roy, can you look at the snowflake
Yeah.
and comment about this move from through the 200?
It's this is this is a great, it's a well-known, well-received technology company that that's very expensive, but it's everybody, I mean, it's it's a great company, but the stock's just not performing well right now. The stock action's poor, but the stock's above, it just broke above the 200-day. So it's got a relative strength of 71. And so, it really doesn't fit the criteria that I'm looking for, but it is off the bottom. But, a number of these stocks are off the bottom. And so that's, you do have, there are opportunities. I'm not going to say there's not opportunities to buy stocks that are beaten down, that give you great entry points. But I found that if you have a number of these, you typically have a portfolio of underperforming stocks over time, and I don't have enough patience or long enough holding period for it to work out. I get bored with them. So that's just my experience here. You had really good action. You look at the accumulation. So you had two nice accumulation pocket pivots, those are called, that suggest that the downtrend is over. So, it's showing, this is a stock that had no life, and now it's showing a breath of life. So could be turning the corner here.
Roy, can you
Thank
look,
you. And
Roy,
Sure.
can you look at GWRE Guywire software?
Oh yeah. So this was upgraded. This had a nice upgrade today. In fact, Minter Vinny bought it. He sent out an alert. He bought it and it squatted that day right there. And, you have this nice VCP and it broke to new highs. I even thought about buying this stock today on the open because $90 stock, the price target was raised to $117 today. Stocks that are 90 go to 100 and it's 97. So, I thought about, buying, a few thousand shares of it for just for like a swing trade, like for a 2-day trade, 2 to 3 day trade. But I didn't. But stocks that are $90 go to 100, it's breaking into new high territory. So I think this is an example of a stock more that I would consider versus Snowflake. The stocks breaking out to 52-week highs.
It's got earnings coming. It's a little bit scary about it, but
how far earnings? Earnings are in how many days? 21 days.
I think
So,
I want to say
you got 3 weeks. So really good action with the stock today.
Yeah. Another stock in the same sector is VRX. Vertex, I think it's Vertex Financial.
VRX.
VRX. It had a nice reaction to the earnings.
VERX. Okay. Yeah. See, this gets my attention. See, this is exactly what I want. See, look at the response to earnings there. They had a good response and then they sold off. Here you had a good earnings response and you had this earnings drift. That's what that's called. So you have another one breaking into new highs here. So I think this is quite positive. And I think that's quite positive. Really nice reaction to earnings. It's a small company, $4 billion, thin, it's very small. I couldn't buy it because it's not enough liquidity, but very nice reaction to the earnings call. And that's exactly 4 straight days of higher than normal volume. That's really good action. This is a smaller stock that has got my attention. KD, Kendrill Holdings. Look at this, and this is perplexing to me because it's got $16 billion. Who on the call has ever heard of Kendrill Holdings doing $16 billion in revenues?
I heard of it once I saw it gapped up. That's when I heard of it.
Yeah.
It was originally
Yeah, so this is a spinoff from
My brother
IBM.
actually mentioned this one to me. The only thing that I didn't care for were the declining revenues.
16, but look at this, like
Look at the weekly,
16
it has
billion.
declining
Look at the
revenues.
market cap, 4 billion. So this has got a price to sales of a quarter. All these companies that we're looking at, they have price to sales of like 20. 20, 30, 10, 20, 30. This has got 1 quarter. So I don't know a lot about it, but it's a spinoff from IBM. And, I saw someone put it in the chat, and they're going to turn profit. They've lost money before, but this is really excellent, an excellent response to the earnings call, even though they didn't make money. So this is one. Just keep your eyes peeled on this. This really good action on the earnings report. The reaction to earnings. Don't know anything about it.
Wes, what about DoorDash, DASH?
Man, I really like it. I like the setup here, and I have a client that worked for them for when they started the firm, and it's been, it's an IPO. They've got great management, and this is a stock that's going from losing money to making money. I'm just in Uber because of their breadth of products, just their footprint, I guess you might call it. It's got a better following on Wall Street, but this this stock acted really great on the earnings call. So, I think it should definitely be considered, and I am considering it. It's like, man, this is a buy right here, technically. You've gone through this IPO bludgeoning, where it got bludgeoned to death, and now it's coming back. You had to pull back now. You've got, like, it's gone sideways for 3 weeks. So this is where we might find a number of these leading stocks and companies like this, which are turnaround situations. So I like the action. It just pulled back normally to the 10-day, and I think it should definitely be a candidate. It's a $90 stock going to 100.
Hey, Roy, I have a couple of names I'd like you to take a look at. DRS, which is a defense contractor, Leonardo, DRS.
D as in David?
Yes.
Okay. Looks
David,
like
Raymond, Sam.
Looks like my Market Smith is pausing.
Yeah, he might be up a little bit too, again.
Yep. Okay, here we go. Really nice chart.
In fact, I don't think I'm still seeing DoorDash on your screen.
Okay, okay, it's moved. Let me see. It's changed on my screen. I'm looking at.
Okay, there it is.
Now
Yeah,
you
we
can
got
see
it.
it.
You guys don't see it?
Yeah, we do now.
Okay, so I'm still having internet problems. Great chart, looks good, 98 relative strength. They just reported earnings. You had a really good response to the earnings call. So definitely it's a small company. It's definitely looking decent.
And another one is JBL, Jabil Circuits.
Yeah, Jabil and FN. So there's an earnings, so that's not responding great to earnings, but the numbers are, the numbers are minuscule. Like it's a contract manufacturer. The margins are so thin and so small. So, revenue growth of -6%, 2%, 8%, just the numbers aren't powerful. Maybe they've got something brewing here. And I think there was talk that there were, somehow linked to the AI area as well. A competitor of theirs is Fabrinet FN, same kind of reaction to the number, 2 earnings calls went to new highs. Just don't know about this. I just don't know about this business. But, you had a really good response here, but it got kind of, it gave a lot back that you wouldn't want to see. It came all the way back down to the 50-day. Normally, these leading stocks, after they break out, you don't want them to come back to the 50-day. You want them to come back no more than the 21-day. And so, questionable. It's questionable the way that it looks.
Great, thank you very much.
Hey Roy, what about Kratos and Qualis? Kratos,
QLYS.
And Qualis. Kratos and Qualis. Thanks.
Great action on this stock. The leader obviously is CrowdStrike, and you've got CYBR also that's in the group. But the numbers are okay. Numbers are okay. The stock action is like really good. This makes me under the hood. I'm looking at, well, who's buying this stock? The earnings, the earnings are decent, 13% revenue growth. But why would you buy this one when CrowdStrike is giving you 106% earnings growth, 84 big numbers too? Why would you buy QLYS when you've got CrowdStrike and Palo Alto? But you can't argue with the stock, and this is something that I really like. This thing is in all-time high territory. So you got this green line breakout where it's in all-time high territory. So this should not be dismissed at all. This should definitely, some time should be spent on this as well. So I need to take a look at this as well. I've seen it, I've been watching it, and it's got really good action here. When are earnings? Or they just reported? So this has got really, makes me think this stock is going to be a buyout candidate, to be honest with you. Like, why is this stock going? It's a smaller player, see 6.4 billion. This is the kind of thing where Palo Alto or one of those other companies will scoop it up probably. And
okay, thanks.
CYBR's another competitor they're from Israel. Same kind of security company. They don't have the numbers that the other 2 companies have, but the stock action is very nice. And this is about to go into an all-time high territory too soon. CyberArk. And what was the other symbol of the other company? you had one other company. What was that?
That was Kratos. Kratos. Kratos.
Oh yeah. That's KTOS.
Yeah.
Yeah, so this is another one of these defense companies that looks quite interesting. So, you know, they're in the, of course, they're in the what are the planes? The drones. They, you know, they're in the drone industry. So we know that, you know, more and more of our weaponry is being, and our military is being equipped with drones to fight our battles, and KTOS and AVOV are the leaders there. So this is, you know, I like this sector of the military more than the big large firms like Raytheon and companies like this. So this has got this looks really interesting. Really interesting. You know, not a lot, the 20% growth. Earnings are okay, but they're, you know, perhaps the fundamentals are such that, you know, they've signed military contracts out for like the next 10 years. So definitely a good stock chart. And this is AVAV that reported, you know, great earnings report. So you didn't really like to see this action. See, after the earnings report, you know, the stock gapped up and then gave it all back. See, and that's not, you know, that's not great. That's problematic, but it has rallied and come all the way back. So they're definitely two to watch, two to consider for sure.
Roy, could you look at DT?
ET?
DT, Dynatrace.
You had a break there on earnings. This is one that I've been following for a while. You know, it's coming all the way back. Not a great pattern here. It has gone straight up. It needs to really build this, you know, right side of the base, you know, below all the averages until recently. So this would be a subpar candidate for, you know, for me. This action here is, you know, you would just like to see something, you know, with just in a really tight uptrend. You can find better merchandise in this computer enterprise area.
Okay,
Roy,
thanks.
does AMD have any respect yet?
Yeah.
You look at AMD.
Yeah, so this is, you know, look at where this stock broke the downtrend line. See, it broke the downtrend line 9 days ago. See, this is where things changed, guys, like right here. You know, so
sweet.
This is, you know, now this is reacted great. You know, they're, of course, they're the biggest competitor probably to NVIDIA that's out there. And, you know, they're working on their AI chips that they're going to launch in the sometime in the fourth quarter. And now you have better, you know, you've had better action. The idea that it broke the downtrend line and then it took out this 111.31 pivot. It's now in an uptrend. This stock should be bought on a pullback. You know, so it's improving. The old high is 130. It's, you know, it's a far difference between a 132 and 93 to all the way to 120. I mean, it's not necessarily, it's just extended here. It just needs to go sideways, give you some kind of pivot, but it's now in a short-term uptrend. So I would give that one a pass. Not a pass, like a passing grade of yes.
Hope it's got some legs to Zscaler.
Zscaler looks terrific. So, you know, Zscaler, terrific. This is, you know, those, you know, the three big ones now are Zscaler, Palo Alto, and CrowdStrike. And, you know, great action. only 5 years ago it went public. It's broke the downtrend line. Stock looks great, and it looks like the leader. 96 relative strength. Earnings are in 13 days. So again, Fortinet, FT&T. See, they reported right here, and it got hammered. This Fortinet, see, it looked great, and then going into the quarter, then it got eviscerated. That's what I'm thinking about selling CrowdStrike because Palo Alto is reporting tomorrow. And because I don't know if there's going to be some residual, collateral damage or not. But Zscaler looks fantastic. So definitely, an A plus. And let's see if it'll get through. See if it'll get through the Palo Alto report. That's exactly what you want to see. And what you must contemplate what might happen if Palo Alto misses, and you should have a plan in place for what if Palo Alto misses and this drops, or you can sell this, or you can buy more on the pullback. But look at the numbers. The numbers are just outstanding.
Right. When checking the fundamentals, what would you like to see other than like earnings growth and sales growth? Like, do you care about how much debt and all these kind of things, or
no? And the greatest winning stocks historically have always had high PEs, and so I've been trained by O'Neill, and PEs never mattered. PEs never mattered. Debt really, never mattered. What matters are the things that he designed in MarketSmith, like to make a composite rating. The composite rating is Investors Business Daily's way of taking everything from a financial perspective and putting it into one single indicator. And composite ratings consist of looking at things like earnings per share rank, relative strength rank, sales margins, return on equity, industry group rank. Those are the most important ingredients to look at in terms of finding a stock that will go up in price and finding a leading stock that might go up 5 or 10 times. Remember, and I remember when I used to throw this out. What's the kind of smart aleck in a way? Like, what's the easiest way of making $1 million? And I did that after I made my first million many years ago. And the easiest way of making $1 million is starting with 900,000. That first 900,000 is a bear, So we must ask ourselves, what's the easiest way of doubling your money? Well, the simplest way of doubling your money, which is what you're trying to do, in a year, is to have one stock and have all your money there, and it goes up 100%. That is by far the easiest way of making 100%. But you have to put some type of boundaries and some type of guardrails, on yourself. And so that I have found over the years that when you're trying to achieve results like that you can do that, but you need to have like only 4 to 5 stocks. But then you get into the question of, well, how much risk are you taking to do that? And that's when it becomes quite complicated. And that's an individual decision. So O'Neill taught that, that you made the most money in a concentrated portfolio, put all your eggs in one basket and watch that basket closely. And I guess that's what I've done. And that's what I've adhered to over the years for myself personally. Managing other clients' money, it's much more difficult to do that and take that kind of risk. But personally, if you're going, if you really want to build your war chest, it's going to come from concentration, having 3 or 4 stocks and getting them right and being heavily concentrated in only 3 or 4 positions, and then having very strict risk parameters and risk controls. That's the secret of making really big money.
So that is what you normally have, like 3 to 4 stocks, or at any given time nowadays? Or?
There's a lot of stocks to buy right now, and I happen to own 12 stocks right now. I've got 10% positions in 12 stocks, right now, and I own those, and I own the stocks. I own a few stocks that I normally buy the same thing that we buy for clients. I mean, I'm buying the exact same companies, but I buy them more concentrated in more concentrated positions. But when I won the U.S. when I came in second in the U.S. Investment Championship in 2021 with the 214% gain, I had all my money in one stock a number of times during that run. And, it's going to be very difficult to compound your results. If you have 10 stocks and you make 20%, on, those 10 stocks, your portfolio only goes up 20%, so you're going to have to find a different way of skinning the cat. And that is through concentration. But of course you take, you take much more peril in your own hands when you do so.
Yeah. And one more question. So normally how long is your average holding period for any given stock? Like 2 weeks, 4 weeks, 1 month, 2 months?
It just depends on the market environment. Market principles never change, but market conditions do. And in like 2020, both in 2020 and 2021, probably my average holding position, my holding period was 2 to 3 weeks. And I had a few stocks that I held for like 8 to 10 weeks. Remember, earnings are reported every 13 weeks in the cycle. So if you buy a stock and it gaps up on the number and then it goes up 20%, remember O'Neill's got the old rule that if something goes up 20% in a brief period of time, like 2 to 3 weeks, you hold it for 8 weeks. And that's how you get the stocks that we've talked about that have potential. They're serial gap uppers. They gap up. So occasionally you'll get a few of those, but very rarely do I hold something. It's been a while since I've held something more than 13 weeks. The market environment hasn't been conducive for doing so. So for swing trading, you can get most of the juice out of the lemon in 2 to 3, 4 weeks when everything is working. And then you compound, then you turn it over, you turn that edge over and over and over. And in a bull market like 2020, you can do that. And that's how you compound your results.
Thank you.
Guys, we'll take a couple more questions and then we're going to call it a night. I think my voice is going, but a couple more questions and then we'll call it a night. Yeah, so I see someone, APPF. Yeah, this is intriguing. Thanks for bringing that up. Whoever did that, I think maybe that's Matt. Yeah, oh man, look at this action today. Yeah. Look how the stock broke out, and we call this when it came all the way in, what would be the term? it just came back in. I'm trying to think of what the common term is that it didn't follow through. It came in and just stayed right there. And so it had a great earnings report, responded great, but see, the market wasn't conducive. So look, count the days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. See, this was 15 days ago. This is before the market turned. So this is before the market turned, but you know, great numbers, great action now. This should definitely be a potential go-to candidate as well. APPF. That's what you're looking for. So you're looking for just that type of action. Yeah, go ahead.
That one's pretty thin. I've been watching it, but it's less than 200,000 volume.
Yeah, it is very, I see it. It's very, very thin, but you know, you could buy a couple of thousand shares and not move it, you know. So, you know, 1,000 shares, you know, you can get a nice position here in it. But you know, stocks like this, you know, I like a stock like this that's thinly traded and it's a high price, so it's easy to put money into it. You know, you can easily put a lot of money into it, and then maybe the institutions. Let's see if IBD's in it with any of their mutual funds. Yeah, so you've got some A plus. You got some A plus funds in it. 400 funds on it. Looks really good, and you say, can you look at RPD? Rapid 7, great action today. The gap up going through this resistance. IBD's got membership here. You've got some A plus funds that own it. You know, I love Federated. Earnings are out of the way, which is great. Great earnings quarter. They're in the security area as well. Really good numbers, great action. You know, definitely should be on your list too. And by your list, I mean my list as well. It looks great.
Or HWM, Roy.
What's the symbol?
HWM. How much?
Great action here in the aerospace area, metal products, really good numbers. So, you know, this is what I like about this. This is not your typical aerospace company like what's Raytheon, or is that RTH? No, Raytheon, RYT.
RTX.
RTX. So there's Raytheon, a mammoth player in the aerospace area, and versus HWM. This is the one you want to own right here. So definitely, you know, definitely great action. Earnings are out of the way. And let me see here. Oh, outstanding. Look at this, going into all-time high territory. Definitely looks great. It's, you know, it's actionable right here. Looks great. Looks fantastic. So
I like all that accumulation after.
Man, that looks fantastic. You're right.
Yeah.
Right there. Look at that.
Yeah. It's impressive.
I would definitely. This has got exactly the type of action that I look for. Looks great. And you know, if the market pulls back, it comes in to like 50, maybe the 10-day, but it's taking 51, taking all this out. You know, all this overhead.
Mm-hmm. Great industry group as well right now.
Industry group ranked 18. This looks fantastic. Guys, I think that's it. I'm going to call it a night. Guys, thank you so much for attending tonight. I hope that we all can continue to prosper. Things have changed. We went over a lot of stocks tonight. I really particularly like stocks like this HWM that you brought to my attention, and I always learn something. And it's nice to hear what you guys own as well for just to be on the same page.
Well, thanks,
So
Roy.
thank you guys for attending tonight. We'll send the slide deck out to you in the next day or two, and we look forward to seeing you next month. And you guys have a great day, great night. Good night.
Thank you so much, Roy. Bye-bye.
Great meetup.
Good night,
Great
Roy.
meetup.
Thank you.
Thanks.
Thank you.
Happy Thanksgiving.
You too.
Thank you.
You're welcome.
You're welcome.
Very good.